Let's get some more on this. Dr. Stephen Nash joins us now from FIIG Securities. Great to see you. Good morning. Just firstly, your thoughts on Mark Carney's appointment there as the new Bank of England governor?
I think it shows that at this point the UK is in a very difficult situation. I think that they're looking to probably change the way they're operating at this point. They're facing a lot of difficulties, particularly with their relationship with the EU broadly. They've had a lot of quantitative easing, so maybe there may be a change coming up with this new appointment. So I think that they're right in terms of trying to get the best person for the job, and I think it's a positive for the UK broadly.
Okay, I guess just turning to continental Europe, and as we know in Brussels, the talks on the way there are ongoing there. Yeah. I think it's the fourth round of talks in about 2 weeks. What do you think? I mean, what's that telling you? Are we going to get a deal? And the continued toing and froing between Germany and the IMF over the haircut on the public creditors' Greek debt, whether or not that's going to happen. What's all that signalling to you?
I think at this point, it's signalling to us that Europe in some senses is a little bit on the dysfunctional side. These differences between the parties are really quite petty at the end of the day. The deal itself needs to be done, and I think without the deal we've got a lot of follow-on catastrophic sort of financial events that could flow on from this, and the way this deal is dragging out signals to us, I think, that Europe really needs to get its act together and get these differences sorted sooner rather than later. And I think this also reflects badly with regard to negotiations with regard to the other peripheral countries, particularly Spain.
Interesting officials reporting to Reuters that the deal has been reached to cut Greek debt to GDP to 124% in 2020, though the package of extra steps, through a package of extra steps totalling about 20% of GDP. What do you think of that initial sort of word that we're getting through that's happened? I mean, we've definitely seen the euro rise and the Aussie dollar rise in the past 15 minutes or so since those reports started to filter through.
It sounds like the IMF have been fairly adamant about that ratio being met in 2020, although it seems as though they've raised it somewhat. So a compromise has been struck. Now, if this deal is done, that's great news. However, as I said before, I think the length of time it's taken to get here is symptomatic of these very significant differences particularly between Germany and the peripheral states. And I think this has got to stop, and they've got to become more cooperative. I think last night also these differences are leading to a very severe recession in Europe, and we saw some German indicators which, particularly on the confidence side, are indicating that confidence is starting to be affected even in Germany. So again, the rolling recession is starting to impact the core countries. We saw last week the French rating was lowered, and now we're seeing more effects on Germany.
Yeah, and it's interesting. I mean, as you're sort of mentioning there, I mean, there's still actually no detail being released yet on how they'd reduce this debt. So obviously that meeting's still going on there. We'll keep an eye on that. I just wanted to ask you too about some local issues, and we've seen that MYOB deal. What did you think of the margins? Is it going to be well received?
Look, it's a fantastic margin, great spread. However, they're paying the spread for a reason, and I think investors really got to look very carefully about the terms and conditions in this particular issue. They have to realise that there's very little protection if something was to go wrong via the MOB franchise. Obviously a great business, however this is a subordinated deal, and if there was some problem with the company, there's very little protection for investors. So yeah, great spread, and I think it will be quite popular. However, investors really have to be very careful about the risks associated with this particular transaction.
What other alternatives are you looking at in the OTC market?
Look, in the OTC market, there's probably a lot bigger range of securities for investors to look at. Risk is a lot lower than these sort of securities. Institutions screen the deals that come into the market, so typically these are all investment grade transactions, and institutions go over the terms and conditions with a fine tooth comb. We We allow access to that market via our service. There's a few other people who do it as well. It's something that investors should really consider alongside the ASX debt offers, I think.
What about, I guess, offshore, looking at the Barclays bond, the issue there?
Yeah.
What did you make of that?
Well, it's been a topic of conversation in capital markets last week, where Barclays issued a security which triggers the face value of the bond to go to zero if the Tier 1 common equity capital goes below 7%. So it's a different style of transaction to what we're used to. Typically these securities convert into equity, but this one converts into zero. So I suppose the idea is that if it was to convert into equity, the equity won't be worth much anyway. There was a lot of interest in the transaction. The book was much larger than the actual issue size. However, it's been trading a little bit poorly in the aftermarket, and I think the market really doesn't know how to price these securities accurately right now, but given the success of the transaction, it might be a popular structure that other banks will use going forward. Quite a risky transaction, obviously. However, offering quite a good spread at a time where there's really not much else out there in terms of spread product.
As always, Stephen, thank you so much for your time and your analysis.
Thanks very much.